All right, let's dive right in. Today, we're going to crack open the latest financial report from Travelite Holdings. We're going inside the numbers for the first half of their 2026 fiscal year to really understand the story they're telling. And boom, right off the bat, here's the headline number. We're talking about a loss from their continuing operations of just over $2.9 million. Now, that's a big number, for sure. But, a number like that doesn't mean much without some context. And here is that context. Just look at this. In the same period last year, the loss was about $381,000. This year, it's nearly 8 times bigger. Whoa. That's not just a little dip, folks. We are talking about a serious, dramatic downturn, and we need to find out why. So that leads us to the real heart of the matter today. What on earth happened here? I mean, how does a loss that was kind of manageable suddenly balloon into a multi-million-dollar problem in just 1 year? Well, to get to the bottom of that, we gotta dig into the numbers. Okay, so first stop on our little investigation is the income statement. You can think of this basically as the company's report card for the last 6 months. It's going to show us where the money came from, where it went, and, how they ended up $2.9 million in the red. So the first piece of this puzzle is revenue. That's the total cash they brought in from sales. And, well, it's not great news. You can see it fell by almost 9%. Dropping from 16.7 million down to 15.2 million. So selling less stuff is where the problem starts, but believe me, it is definitely not the whole story. Okay, but here's where it gets really telling. Look at the gross profit. This is the money they have left after paying for the actual products they sold. While their revenue dropped by 9%, their gross profit just plummeted. It went down by over 18%. So what does that tell us? It means not only did Travelite sell less, but the profit they made on each thing they did sell got squeezed. A lot. So the big question is why? Why the weaker performance? Well, the company themselves pointed to a couple of key things in their report. First, they said demand was just weaker because it wasn't a big holiday or festival season. And second, they're pointing to all the uncertainty in the market from, global trade tensions, which just makes everyone, customers and businesses alike, a little more careful with their cash. And if we break it down even further, this table really pinpoints where the bleeding is happening. When you look at all their different business segments, one area just jumps out. Take a look at specialty stores. These are the shops that Travelite runs themselves. They posted an operating loss of over $1.4 million. That's a huge chunk of the entire deficit, right there in that one segment. All right, so we've looked at their performance. Now let's shift gears and check their overall financial health. For that, we turn to the balance sheet. Think of it this way. If the income statement is a video of their performance over time, the balance sheet is a single snapshot. It tells us what they own versus what they owe at one specific moment. And the first number that just jumps off the page is this one, total liabilities. As of the end of September 2025, Travelite had debts and obligations totaling more than $33 million. That's everything the company owes to someone else. So where does that $33 million number come from? Well, this chart gives us the breakdown. You've got two massive slices here. Other financial liabilities, that's mostly bank loans, comes in at almost $16 million. And then lease liabilities, the money they owe for renting their stores and offices, is another $12.4 million. You put those two together, and it's over 84% of their total debt. Okay, so this is the real kicker. You put it all together, and what do you get? On one side, you have total equity, that's the value that theoretically belongs to the shareholders, sitting at $27.3 million. But on the other, you have those total liabilities at $33.4 million. It means the company technically owes more than it's worth on paper. That's not a great place to be, and it really highlights why they need a major turnaround. So after seeing all that, you've got to be asking, okay, so what's the plan? What's next? Let's take a look at what the company is saying about the road ahead and how they plan to navigate these pretty choppy waters. And you have to give them credit. They are not trying to sugarcoat this. They're pretty blunt in their outlook. They're saying they expect the economy to be weak and for customers to keep a tight grip on their wallets for at least the next year. And they know the retail world is just going to stay super competitive. So they're setting the stage for a really tough fight. So what are they going to do about it? Well, they've laid out a few strategic moves. They're going to hit up luggage fairs and run more promotions to try and get some quick sales. And for the long term, they're talking about opening new stores, maybe even buying other companies and bringing in new brands. It's a pretty wide-ranging plan. But what's really interesting here is what's not explicitly mentioned, a direct plan to fix those huge losses coming from their own specialty stores. And all of this brings us to the big final question, doesn't it? They've got a plan for sales and expansion. But with the market looking so tough and their finances under so much pressure, is this plan really going to be enough to turn the ship around? That is the multi-million-dollar question for Travelite. And honestly, only time will tell.